Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief, No Donation Friday. Today, we're going to talk about the big news drop that happened today. We're going to get a war update and really a few things that you need to look for going into the weekend. We're also going to talk a little bit about Friday psychology, backed by popular demand. We're going to go over our No Donation Friday rules. We're going to talk about what it is to trade Friday and why you need to understand that it's all about momentum and trading. Monday, we get the momentum going. Tuesday, Wednesday, Thursday, we ride the wave. And then Friday, we throttle it back. We get into the clubhouse with a little bit of momentum on our side, with a little bit of money and something to show for our efforts. Remember, this is a job. If you're going to be a professional trader, you approach this like a job, just like anything else you would do. You show up, you get your strategy in line, you get your risk in line, and then you execute your trades. And then at the end of the week, you go home with some money. That's the idea. Now, you're not going to win all weeks. I've had bad weeks. I've lost before. I mean, that's part of it. It's part of what this is. You limit your exposure. You make sure that your bad weeks aren't horrible. You make sure that your good weeks are good and that your bad weeks aren't horrible. And one way you can do that is manage Fridays aggressively. So I'm going to go ahead and show you how to do that as we get deeper into this session, in this live stream. I'm more than happy to take any of your trade ideas that you'd like to look at, anything from a market perspective. I'm more than happy to break it down on the charts. Right now we're watching everything turn blood red. Let's get right out to price action. Had a 4-hour sell up set up right here on the 920 EMA crossover strategy here in gold. Gold's coming off nicely. It's down to about 50.46. We're going to go to a gold trade idea here in just a second that I put out earlier today. We had a near miss. I thought we had an opportunity maybe to get it. We didn't quite get it, but it looks to me like we may get an opportunity here. You're starting to see your tote board turn blood red, and that's not necessarily a good thing. Not a good thing going into the weekend. That really suggests that these markets are weak. The VIX is down a little bit, down off about 0.5%. That's nothing for the VIX. So the VIX relatively flat at 27. You've also got your stocks are sliding. Right now, gold's sliding a little bit. Oil, not really doing much. It's only up about 0.5%. But the key there is you're getting established above $95, and that is not good. That is not good. That sets us up for a weekend news cycle that could drive things north very, very quickly on Sunday. That's what we saw last Sunday. We could see the same types of things. So good to see everybody back. Let me see Ralph H. Good to see you, Ralph H. Welcome. Bobby Bob, I coach No Donation Friday. Absolutely. Absolutely. Today you're neutral. Nothing wrong with that. Nothing wrong with being neutral on a Friday. Some of my worst days were Fridays. That's why I adopted these rules to get through them just fine. Andrea Garwell, good to see you. Happy Friday. Happy Friday, Andrea. Out there on YouTube land, Jason Max, good to see you. Jason, SNE, good to see you. SNE, welcome, welcome. Tina Jing, always a pleasure, Tina. I'm confident things are going well for all you traders. Going well for me. I'm having a pretty good week. Not bad. Happy Friday to everyone. Good to see you, Team Marina. All right, guys, let's go ahead and dive into a little bit of what we need to be talking about today, which is news. There's a lot of news out there. We've got some trade ideas, one that I put out earlier, one that I put out yesterday. You guys are going to be interested in. I think they're pretty good trades. Sort of been a mixed bag this week, to be brutally honest with you. Not real great. We had one of those Great Britain pound New Zealand dollar did not go very well. So that's one of those we'll look at here in a second. Recap that one. And then also Great Britain pound euros showing signs of life. But man, it seems like we've been in that thing forever. So I'm definitely going to recap those. All right, so for right this minute, remember, if there's anything that you guys want to trade, Switch Markets is the place. We've been putting out a ton of new shorts new short videos out on YouTube. Check out on our Switch Markets YouTube channel on current events. And it seems like everybody wants to trade crude oil right now, and everybody wants to trade gold. So if you're in those camps, you came to the right place. We're going to break down both of those assets here in short order. As far as the news blitz goes, not really a whole lot. We got some economic numbers to look at. I'll go through them here in a second, but it just doesn't look good. The picture does not look good. As far as the big stories, how the Iran war could start to impact U.S. retail prices. They should have wrote that about 6 months ago when all this was being planned, or 5 months ago. This right here, that story's antiquated. Don't worry about that. It's going to be baked in with higher energy. Pete Hegseth on the Strait of Hormuz. Don't need to worry about it. That's a bold statement because the global commerce runs through the Strait of Hormuz. Got to be very, very, very careful not to underestimate the impact that can have on the global markets, international indices, U.S. indices. Everything realistically is focused on the Strait of Hormuz. So I disagree with Mr. Hegseth there, but he seems to be a nice guy. He's in shape. That's good. I like to see that out of our leadership. Guy's hitting the gym a little bit, and I like the way he talks too. He's straight to the point and direct. So I do like that. Let me see. Julian, Euro AUD bouncing off a support level. Yeah, let's go ahead. We'll check out the Euro Aussie as well. Anything else that you guys want to look at, be sure to drop them in the live chats. On a side note, before I get started, give a big shout out to the powerful Connor Woods. He used to be a mentor here, and he's working elsewhere, actually in the Middle East. He's in Dubai. Some of you that have been with How to Trade for quite a while remember Connor from about a year back. He would do live streams and things. We would do dual strings with some of the other mentors there. But he is sheltering in place in the UAE in Dubai. So I want to give a big shout out to Connor because he's probably watching today. So if you are, just take it easy, get a little bit of rest, and with a bit of luck, this thing will all be over soon. But good to hear from you the other day. That's always fantastic to hear from folks you work with. It's nice. Turn the clock back just a little bit. So all the best. T Marina, hey Connor. Yeah, I think Connor's around. I think he's usually around. He checks these streams out from time to time. All right, everybody, let's go ahead and dive in. I thought he went to Japan. No, he's in Dubai. He went to the UAE. He works for a brokerage out there. You can just Google his name and you'll see what he's doing these days. But yeah, he's out there still. All right, everybody, let's go ahead and get on with it. Week 11, 2026, Friday, U.S. GDP, durable goods, PCE, and jobs. Big news day. Honestly, the news doesn't mean anything. I can sit here and paint all sorts of pictures about what the state of the U.S. economy is, the global economy. It does not matter. Right now, it's all about the Strait of Hormuz. So I disagree with Mr. Hegseth on that one. All due respect, sir, the entire world's watching that strait. And I write up a risk assessment every Friday. That's going to be right at the top of it for the second straight week. But what we do have is we have a collection of economic numbers. Let's get through them. Talk a little bit of psychology here first, and then we'll get to our trade ideas. No Donation Friday. This is a big one. I haven't covered it in a few weeks because we've been trading. Sometimes it's time to step back and see exactly what our goals are, our long-term goals. Now, everybody's long-term goal in here is the same. You want to make money. You want to be a professional trader. You want to augment your income. All right, you want to be in this game. Well, if you're going to do that, you've got to be in it for a long time. Remember, in the markets, momentum is key. It's all about momentum. It is all about momentum. You have to really dig in and say, okay, each and every day is not going to be a winner for me, but a lot of them should be. Each and every week's not going to be a winner, but a lot of them should be. And you'll find that if you start stringing together enough winning days and enough winning weeks, you get to your goals a heck of a lot faster than if you're just taking these huge winning days and a bunch of losing days. Same things like that. I'm looking for consistency in a trader. I'm looking for somebody who can step up to the plate and have a great chance of profiting every single day, especially if we're trading short time frames. Now, that being said, you've got to manage your psychology. You've got to manage your psychology. I put this together from my own beats. Fridays were horrible for me. Mondays were horrible for me. So what do? We put some limitations on them. Here's mine for Friday. Call it No Donation Friday. That means we are not going to give money back to the market just to give it back. We're not going to trade to trade. We're going to trade when we have an advantage. A winning week. If you're having a winning week, you're going to bank at least 50% of your profits. If you're up $300 or $400, put $2 of it in your pocket. $500 profit, put $250 of it in your pocket. You're going to go home with a little bit of money, and that's going to be absolutely important over the long run. So you're going to take away 50% of your profits if you're on a winning week. I don't care if it's $100, put 50 in your pocket. That's all there is to it. Losing week. If it's a small losing week, trade as usual. That means that you're winning some, you're losing some, you're not getting blown out. You're having an okay week. Try to make it a profitable week. I have no problem with trading as usual. If it's a big losing week, shut it down. Consider waiting until Monday to trade. That's exactly what you're going to want to do. You're going to want to make sure that you're in the game Monday. If it's a big losing week, don't make it a huge losing week and don't blow your account on a Friday. That's a sin. Wait until Monday to trade. I highly recommend that. If you're neutral, if you're right at scratch, if you're zero, maybe you took 5 trades, you won 3, you lost 2, you're right around even. You got options. You can trade as usual. You can reduce your leverage, or you don't trade at all. And that's all up to you. That is all up to you. For me, if I'm neutral, it depends on how I'm neutral. If I took a bunch of trades and I won a bunch and then I lost a few, if I'm trading well but we just haven't made any money, I'm just going to trade it. If I'm struggling a little bit but I still see opportunity, I'm going to cut my leverage and trade. That way, if things go really bad, it's not going to be the end of the world. And then lastly, don't trade. Pretty much if I'm neutral, I'm going to be trading. But if I'm tired, let's say that I've been on it like the last few weeks during this war. If I've been going that hard for that long and I'm fatigued, there's all different kinds of fatigues, guys. There's physical fatigues where we're just out of breath. We got muscle fatigues where our muscles start cramping. We got mental fatigue where we're tired. But there's a type of fatigue that's right behind your eyes. And you get it a lot when you've been driving for 15 or 20 hours straight. And it's a real deep fatigue. If I have that means my eyes aren't really focusing real well. I'm not making decisions and seeing things clearly. I don't trade. So if I'm neutral and that's the situation, then I don't trade. But definitely follow these guidelines and you'll have an opportunity to be in the game for a long, long time. 512 Eli, good to see you. Yeah, Tina, he's doing well. Connor's doing just fine. He was actually really optimistic. They have shelter-in-place orders. They have the interceptors are working well. So he said it's like a mini COVID lockdown. But he was real optimistic and happy. I won't say happy about things because it's definitely changed the game. But yeah, he's doing well. Let's see. UAE is a tax-free country. Yeah, that was the idea, I think. That was the idea. All right, let's get out to mine's not tax-free. Tax day is coming up April 15th, and I actually got to sit down this weekend and work on them. Hate doing taxes. Absolutely hate it. Whatever. That's part of the game, guys. It's part of the game if you're going to do this. All right, so we've got the Euro Great Britain pound trade. That was an interesting one that we put out a little bit earlier. I'm going to go ahead and hold off on recapping this one. It's not necessarily that it's in a bad position. I mean, we could certainly look at it. It's got a nice bounce, but we're right up to about break even. And the big question is where do we go from here? And it's anybody's guess. It really is anybody's guess. We can take a look at basic price action. We've had a little bit. Actually, that's the wrong way. Euro Great Britain pound. So essentially what we've got going here is there's our support line in the sand. I'm not going to spend much time on this, but right there, we took a little bit of a draw. Now we bounced back. So we had a high of about 54. Now we're trading 37s. Nothing's happened yet. Line in the sand for us is 27-ish. Entry was 55. Wanted to be real aggressive here. It's up to you. If you're in this trade, you can get out of it. You could hold it. I think I'm just going to hold it. Looks to me like we could get some accumulation, but definitely a swing trade. This thing's taking forever. It's like watching paint dry. So that's probably not the best trade idea ever. I like to be in and out faster. This one's going to be a little bit different. I think we're going to be in and out of this one relatively quickly if it's successful. This is a Euro USD, and what we're seeing today in the Euro USD is just an epic plunge. It really is a big plunge. You remember we covered that 4-hour buy signal on that 920 EMA crossover, which we do have going right here with gold. But for the Euro USD, if you remember it, we had this bullish opportunity, a possible buy. I talked about this, I believe, in the switch markets, the switch on hot picks from last week. This buy, this crossover did develop. So theoretically, that would have been a buy signal. A couple of options with your stop out points. You could go down beneath this swing low, or you could have put it right beneath this signal bar. The bottom line is you've got to cut these things off. You've got to cut these things off because if you don't take the stop out, things are getting bad. Things are getting bad on the euro end of it because the dollar is on the rally. The dollar index is up to about 100. Huge. We'll talk about that in a second as well. But we're coming off big. So what that opportunity right there could bring us is a shot at a macro level of support. Now, when it comes to currency pairs and it comes to something like the Euro USD, I'm big on macro support. Macro support, macro resistance. I find those to be absolutely key levels when it comes to trading anything, really. Commodities, yeah, sure. But a 38% level that's this big of a deal, right down there, right around 113.50, that's a big one. So if we do crack the 114 zone, and it looks like we're pushing low in a big, big way. We're off almost 3.25% on the month. We could definitely break beneath 114 and go down and have a look at maybe 113.55. Somewhere down in that zone, I think is probably our bid. So that was our trade ID. I think we're going to go hot at like 61, somewhere in this area, but it should be pretty good. I like this one. I would absolutely love to see this market get overextended in the next couple of days. Really see a nice big break to the bear, and then we're sitting there waiting to grab the bounce. Now, I would get the question, Shane, aren't you fading a trend? Aren't you going against a trend? I'd say, well, a little bit, yeah, we are. I mean, that's the bottom line. That's why we're looking for, about 80 pips on this trade. But you can see our monthly range is getting extended. The uptrend here is still incredibly valid. I mean, it really is. And you're going to go down and check out this demand zone that we tested right around that 114 zone back in August of 2025 in July. So a lot going on down here. I think we have an opportunity potentially to capitalize. Are we fading a stiff trend? Well, I mean, on the daily trend, there it is. Is it trending? Yeah, it's a pretty good trend. It really is. There's sort of your move, your pullback, your move. I mean, you could even say that wasn't much of a pullback. You got a little pullback there, but these are just more compression. Compression about 118 lower. Compression 116 lower. So we're looking at a little bit of action down there at 113.50-ish, 113.60. I think 114 is going to get washed out, but I expect some bidders to be there at 114 as well. Pretty good stuff, though. Pretty good movement on the Euro USD. One other thing that you could do to trade this actively going into Monday's session is if you get today's low. Today's low sets up right there. Perhaps you could be looking to draw Fibonacci there and maybe take a sell up there from 115.25, and that's if we stop from where we're at right now. So this is pretty good stuff. I'm excited. You can actually trade the euro when it's moving. A lot of times it doesn't move, and that'll drive you crazy. That'll drive you absolutely up the wall. But I do like this trade idea. I think it's going to be a pretty good one. All right, let's talk about some news events, and then we'll get on to our gold trade idea, which I do like. I don't have a little graphic for it, but we'll just go ahead and show you just the same. I put it out. That one went yesterday. All right, let's do it. News of the day, a lot of it. So just sort of bear with me. We got a few slides. We're going to burn through it because I just don't believe it's very important right now. GDP, not the Great Britain pound. GDP for quarter over quarter. Q4. One came in at 0.7%. These are preliminary figures. They're still adjusting them. Remember, all of these numbers are suspect because of the government shutdown last year. And actually, the government is partially shut down again right now. But in any case, GDP comes in at 0.7%. That was beneath the 1.4% expected and way down from Q3's 4.4%. This is a budding story. This sort of suggests that things are a lot worse than we think with regards to our employment. Well, not employment, but our economic growth. That suggests that the higher interest rates are starting to bite. But we've got a problem. We've got a real problem with oil. We'll talk about that as well. Core PCE price index, not bad. Came in as expected, 0.4%, ticked up a little bit higher year over year, but that's not the end of the world. I would actually say these are moderately positive. But remember, PCE, personal consumption expenditures, are the basis for Fed decisions. That's their go-to inflationary metric. That's what they look at when they're looking at policy. CPI, that's more for the public and traders in the markets. Core PCE is sort of a big deal there for the Fed and the policymakers. So core means that there's no energy in there. There's no energy in there. If these higher oil prices stick around, and it looks to me like they are, energy is going to go through the roof. Speaking with a gentleman out of Europe earlier today, said I think the price of gasoline spiked through the roof and diesel spiked through the roof here in the last 2 weeks in the Eurozone, which is and just outside of the Eurozone there. So, we're not really seeing it too bad in the United States just yet, but that energy is really going to be a huge deal. So this core sort of strips that out for right this minute. I find the core numbers really suspect. Long story, but the big picture is this. Not a bad set of inflation numbers, but they're going to change. They're going to change. Durable goods orders month over January, 0%. That's horrible. January's figures showed the consumption of durable goods, things typically you have to finance, washing machines, appliances, things of that nature. A little bit better than the previous release, which was revised down. That means December's durable goods numbers were down. We were looking for 1.1. We got 0. That's horribly weak. Very, very weak. The PCE price index normal, about the same. Ticked down just a little bit right there, 2.8% tick down. That has to do with the energy factor, the energy costs that were down big for January. They're not down big anymore. So those numbers are antiquated already. Core durable goods, don't worry about it. It's not important. JOLTS job openings. A lot of people talking about JOLTS. I'm not really too worried about jolts. Jolts came in a little bit higher than expected. So what does that mean in the big picture? Well, when you see an NFP number as bad as we just saw, that jolts job numbers doesn't mean much. It doesn't mean much. It really doesn't. We're still on the edge of our seats. We'll see in April, early April, when we do our next NFP. But I am not even remotely concerned about those numbers. Inflation expectations 1 year. Big thing about expectations and sentiment is that low sentiment is bad. Bottom line, low sentiment is bad. So we're right around 50. Now, the Michigan consumer sentiment works a little bit different than the CB consumer sentiment numbers. Michigan consumer sentiment, it's a survey. They get you on the phone. They call you up. People answer the survey inside of the University of Michigan. That's self-explanatory. But 55.5 is typically viewed as being positive. Anything under 50 is negative. 55 is positive still, though. If you look at the historic numbers, sentiment's way down from where it's been over the past couple of years. So not a real positive set of numbers top to bottom here from an economic standpoint. I don't really know what else to say. I can't sugarcoat it. But remember, when you have that GDP that's shrinking and unemployment is going up, and then all of a sudden you're going to have persistent inflation because of energy prices that are elevated, you got a real problem. You get into inflation with a shrinking economy. If they can't cut interest rates to restore pricing stability, the economic contraction will continue. And if that continues, then we're faced with something like stagflation. Feel free to look that up. That's when you got stagnant economic growth, unemployment spiking, and interest rates, not interest rates necessarily, but inflation remaining high. It's a nightmare scenario. Check the 1970s. 1970s, that's exactly what happened here in the United States. Why did it happen? Because the oil shock out of the Middle East, it all stemmed from the Yom Kippur War, which was in 1973. Nixon took us off the gold standard right about then to try to prop the currency up, and it was just an absolute nightmare. So that's where we're at. How does that impact our trading? Day to day, it won't impact it much. But if you're trading trends and if you're looking at the macro situation of what's happening, then it's going to impact you a whole heck of a lot. And we'll cover it every step of the way. But we're starting to see some warning signs that all's not well in paradise, that things could really, the Trump administration, the Trump recovery, the Trump rally could be in big, big trouble. And it looks like that I'm seeing signs. The numbers, these are pre-war numbers. They're not good. They're not good. And I'm buckling up. I'm thinking about maybe we make another leg down in stocks. We'll wait and see. We'll talk a little bit about that. A few parting thoughts at the end of the stream. Let's trade. All right, so for right now, put a trade idea out the other day. It was going to be XAU USD gold. Very simply, this is a 1-minute gold chart. You can see the volatility in the action. I got 5,010 marked as a potential entry point. I really like that 5,000 level. It's a big deal. It's an absolute big deal. So let's go to our daily, and you'll be able to see exactly how many times we've traded this thing. It's a huge deal. Broke above it, came below it, and then sort of stood in there. That's the point of control. There's no question. Ton of business there. But here's what I like about it. Got a daily double bottom. That low right there is at 49.96. This low right here is at about 5,014. I'm looking at about 5,010s. Now, it's not a complete science. It really isn't a complete science. The reason why you would be looking to buy a 5,010 or maybe a 5,009 is because you want a little bit of insulation above 5,000. So earlier today, we got the swing low, the real spike low. I was already licking my chops, and I go, we're going to win this one. 5,019 was the low, so we just missed that by about $9. Still, though, we're in there. We're in the box. A couple of things to watch out for, though, in this gold market. Remember, last week's low is down there at 49.96. I was very adamant about where this market could really turn sour for the gold bugs. What would be the market driver to bring gold down right now? Now, we're all pretty well versed with oil. We know a little bit about gold, right? We trade it every single day. What happens when the dollar goes down? Gold goes up. What happens when wars break out? Geopolitical uncertainty. Gold goes up. It's a safe haven. What happens when you have geopolitical certainty and a rallying dollar? We could build a case that maybe gold has a big washout under 5,000. The long-term analysis all points towards bullish metals. No question. I don't argue with that. I think that the powers that be, the gold bugs, are absolutely correct about that. 100%. The biggest thing we have to think about from traders is if this market was to fall apart, where would it happen from? Well, we've got an interesting scenario setting up. So I do like 5,010, but it's a quick trade. It's not going to be one of those where we're setting up for a real to take a position. This is going to be a real challenge, guys, because you can see what's happening here. There's last week's low right beneath 5,000. Here's this week. We're trading completely inside of last week's range. If we close above last week's low, then we're going to have an inside bar. And I talked about an inside candle yesterday on our volatility workshop. This could be a serious move. This could be a serious move. So let's say this week's low stays where it is, which is right around 5,014. I'm not sure that it will, but let's say that it does. You're going to get sellers right there at 5,013, right beneath last week's low. And if those sellers generate enough action to take you down to 96, the previous week's low, look out. Really look out below. So from a pragmatic perspective, what I want to do to execute is I want to make sure I have a little bit of insulation. And that's the idea about going long from like right in this neighborhood, 5,009, 5,010. The idea is that, okay, we can get the bid potentially and then maybe get a little wiggle and take our money right out of the market quickly before this can get really bad. Now, you'll notice we don't have anything else on our chart. I don't have a bunch of fancy indicators. We'll pull a colorful chart here in a minute, but we don't have a bunch of fancy indicators up there. That's basic price action. And what that essentially shows us and tells us is that there's a potential breakout brewing because there's going to be two stop out points potentially right around that 5,000 level for the retail longs. It's going to be this week's low and last week's low, not to mention 5,000. So is that a risky trade? I'd love to see it go today, and it might. There's a lot of action in there. One other thing we could do here with Fibonacci is just sort of dress up this gold chart just a little bit more. Is something like that. Could show you 78% of this 3-week range, 4-week range. If you do break beneath these lows, it's going to be a significant move. It's going to go down to 49.50, somewhere down in there, maybe even down lower, 48.34, and then we'll start talking about building. And the bidders will be there at some point. I'm convinced of that. But what we're looking to do is execute a real tight trade right before this washout happens. And honestly, I liked it better yesterday when I put it out. I wanted it today. Probably the smart thing to do would be just to pull it and wait and see what happens. But we'll see. Maybe we get it later today. Certainly as a possibility. As far as what we were looking at on the 920 with gold, very, very important that we check out what's happening. Sort of had a bid. You had a buy signal there back on the 10th of March. Got washed out. The beauty of that is if you're playing it tight, you didn't lose much. And even if you were right in here somewhere, you didn't get destroyed with your stop loss. But now the selling is on. I mean, the sell signal right there, 12th of March, pretty good downward move. I would say that 5,000 is still the catalyst for your two-way action. So definitely a lot going on here in this market. Let's see. We've got some questions here. Steve France, it's good to see you. Steve Ralph, I see your question there. Marvel, is it too late? No, you're in. Tina Jing, heard you talk about stagflation last year. Yeah, it's a big deal. If we start to see the economic growth slow, unemployment rises and prices rise, it's the kiss of death for a fiat currency or an economy that's based on fiat currency and consumption. Let me see. Eli, oil is about to explode. Feels like it. It feels like it. It really does. Let me see. Marvel, I was chatting with Grok the other day, and she broke down to me what stagflation was all about and how it affects the market. Yeah, we need to start talking about it. Let me see. Funny Math. Hey, Shane, enjoying the stream, brother. Good to see you. Funny, welcome. All right, we got a great question here from Ralph. What happens if crude goes to $200 a barrel? Is it possible? Well, first let's visualize. Some folks might say this is a stupid exercise. Trading is largely spatial, especially if you're a chart trader. I'm a chart trader, pattern trader. Look at my indicators. So it's got to be a spatial type of a thing. So Ralph, you're not wrong. Can crude oil go to $200? Yes, but we have to be fully aware of what that means. Price isn't just going to go, oh yeah, we're just going to run up to 200. Something very, very serious is going to have to happen to drive crude oil to $200 a barrel. Now think about what happened at 119, just in our mind's eye. What did the world do? They had to put a tourniquet on the damage. First thing, G7 meets, they said, okay, we're thinking of releasing a bunch of our reserves, our petroleum reserves. The G7 doesn't want to do that. They don't want to do that. They see this as largely a regional conflict, but they do understand that when the energy gets turned off, the entire world economy gets crushed. So if you're in the Eurozone, If you're in Japan, what are you thinking? Prop it up at all costs. Okay, we'll release our oil reserves. Yesterday, President Trump decided that he was going to make some announcements that they were going to release. I can't remember how much it was, 127 million barrels out of the the SPR. Let me see real fast. What is it? Okay, yeah, 172, so I got it backwards. Trump orders 172 million barrels released from the Strategic Oil Reserve. Now, let's be real clear about what that means. Number one, the SPR hasn't been filled up in a long time, so they have some oil held back, and this is what it's for. It's not much oil, 172 million barrels. I bet you the calculations probably show that'll carry things for like 2 weeks. That would be my guess. That's how much consumption there is. And, the SPR, does that oil stay at home here in the United States, or is some of it shipped to allies? Don't know. Doesn't say, right? So now you've got oil reserves getting hit all over the place. Okay, the G7's releasing some of theirs. The United States is kicking in theirs. What does that really mean? It means that in the short term, you're going to have a decent supply of oil. Nobody's worried about that. The problem is this. The longer that this war goes on, the more things start to shift economically in Iran's favor. Now, YouTube might take me off for saying that, but it's the honest to God truth. The longer that this thing goes on, the more peril the global economy is in. And it has to do with that energy trade in the Strait of Hormuz. Now, a lot of people aren't worried about the Strait of Hormuz. That's fine. They really do. I hope they have a plan to open that and keep it moving smoothly. There's been talk of mines being placed. It's been mined before. The United States has intervened in the strait before in the past. I believe in the late 1980s under Ronald Reagan, they went in there hard to really reestablish that as a shipping lane that was going to be sort of unfettered. But make no mistake, Iran has control of the Strait of Hormuz, and they do because of the geography. So that is the number one concern weighing on oil. So to answer your question, a couple of things here, Ralph. To get crude oil to 200 is the first thing we need to think about as traders. And then we'll talk about your question. What has to happen? We saw 2 terror attacks here in the United States yesterday. 2. They look like lone wolf attacks. More than likely, there's going to be more of those. There's also threats supposedly about drone attacks in California. A lot of people are wondering about that reporting. That was crazy. I saw that yesterday. I went, wow. So what we're looking for here is a large-scale terror attack, something like a 9/11, something that has a huge impact on maybe Western nations, either the United States, UK, you name it, somewhere in the EU. That would drive prices to $200. So in the region, war as usual, it would take a long time for us to get to 200. It really would. You saw what happened at 119. They stepped up right around 120 and 125 to make sure, okay, this is the top of the crude oil market. What would it take to go to $200? It would take a major outlier, a major outlier. Could be huge strikes from Iran on someone else that surprises everybody. It could be a nuclear weapon out of Iran that nobody thinks they have. It could be a terror attack. Over time, let's say this goes on for another 6 months. Just bear with me. I know nobody wants to hear it, but let's say this goes on for another 6 months. I have flashbacks to COVID. 15 days to flatten the curve is what we were told here in the United States. And all of a sudden, people were being locked down for over a year and a half in some areas. So could this happen over time? Yeah. If it goes for 6 months, what could happen here? We could see things like this. You run up, then you base at 125, and then boom, 150, 175, 200. It could happen, but it would take time, in my view. A lot of people believe it's going to go there overnight. It's going to take a major surprise to get oil to $200 overnight. Now, what's happening right now? We're basing right around 95. That's not good. Remember, last Friday's close was about $92, and we opened Sunday at 103. That means anything can happen this weekend. 95, we could open at 110. We could open at 125. Anything's possible. So to answer your question, what will the world look like if, in fact, we are at $200 oil? The global economy is pretty much finished. If it lasts for any period of time, and I think it could last for as little as 6 weeks, global economy would go into a recession we haven't seen since the Great Depression. There won't be any energy. All of a sudden, nobody will export anymore. There won't be the ability to import for island nations. That'll be devastation. For anybody that doesn't have any production capabilities, you're going to be in real trouble because there's going to be nowhere to buy the oil from. That is what everybody's worried about. Sinking oil tankers in the Strait of Hormuz and taking that offline for maybe the next 2 years. Something like that would get you up around 200, but it would take time to do. Right now, 12-month chart, January 2008. I was there for that. I remember that. 147, 150. Pretty crazy. That's the global financial crisis. That was the liquidity crunch. All right, then right in here, I was trading right here, January 2011, up right around 114. Crazy, but look at the yearly range. It wasn't even close to the yearly range we're looking at now. So the volatility, I always talk about Arab Spring back in 2011 when I started. Not even close. Not even close. That type of oil price by here, I was working in the oil field. Oil prices were here. I was working in the oil field by then. So it's going to be a complete restructuring of everything. $200 crude oil will make the impetus for the United States to begin drilling. The oil industry here in the States will expand overnight. They will go to 24-hour production. They will pump as much as they possibly can to the point where there's no way to get it from the wells to the storage facilities, which will be full anyways. The rail, truck, you name it. I've seen it before. Back here, that's exactly what happened, and it was a deep global recession. To answer your question, Ralph, that's a great question, and I know I've droned on too long about it, but it's very serious, and it's one that we have to consider. Now, as far as trading WTI crude right now today, there's your daily chart. That is the biggest day I think I've ever seen on the crude oil market. That's a big one. That's saying a lot, too. What's that, $38 range? That's astounding. A little bit of a pullback here, and then we're just back off to the races. So we've had about a week, about 4 sessions to really understand what's happened. A couple ways to draw your Fibonacci's in this situation. Spike low, spike high, pullback right around 62%, 84, 85. Went right to about 78%, which is at 75. The low right there, 76.43, and the bidders step in. Clearly, we're bidding quarters. 75 is going to catch bids. I think that we could very easily close at $100 here for WTI today. Do I want to be long or short? What's today's high? Today's high is 98.09. What was yesterday? Yesterday was 97. We've already traded above it. Watch 98. If we break above 98 late in the day, it could be a big issue. As far as intraday price action for WTI crude, I know I'm spending a lot of time on this, but it's very important. This is what runs everything. So let's go ahead and turn on our TPO charts. Point of control. 95.98 coming into yesterday. What's today's point of control is right there towards the bottom end of yesterday's value. So we're trading right at that value area high. Take a look at what's happening here from a basic perspective. Value high from yesterday's where? Right where we tested the top. Tested the top, rotated back down. Bidding as soon as the volume got back in the markets. That's absolutely huge. It feels like, the observation right there was made by 512 Eli that we're going higher. We're going higher. It's just a question of, where do we get in at? To me, the point of control is still back down in this zone somewhere right there for today's point of control is right around 95.44. Maybe we're fortunate and we rotate back down and close at 95. That would actually be a very bearish signal for crude oil. That's for sure. But right this second, if we go up, if we break out to the top side, if it closes above 98, you're going to open at like 105 or 107 on Sunday, unless somebody comes out of a cave with their hands up. That's the truth. That's for sure. Let me see. I got some questions here, and then we'll go ahead and take a look at any markets that you'd like. I'm sort of an open book today. We've covered gold. We've covered oil. Those are the big ones. We could look at some of the indices. We're starting to see some real stress fractures. I'm in like the US 100, US 30, US 500. Boy, our US 30 trade, right, selling 50,000 definitely looks to be the play. A lot of folks did it. Let me see. Okay, I got questions everywhere. Let's start with Steve Francis over here in the How to Trade trading room. Would the U.S. not buy Russian oil to keep the lights on? I tell you what. I think that if the situation gets bad enough, all bets will be off. All bets are off. You'll see new treaties signed. You'll see resolutions signed. If you need oil bad enough, it's funny who becomes your friends, right? I think for 100% that would be on the table. 100%. It's good. It's a really good question, Steve. Personally, I think that the money dictates everything, and I think that you could definitely see all sorts of limited sales or anything. Look at that test of the top of that value area right there, right around 97.25. Fascinating stuff. That's where your breakout will begin in the next hour or so. If it's going to happen, it's going to launch from right here. And if the top of value holds, then maybe we trade back down to 95. It's good stuff. I mean, what a market right now. All right, let me see. Funny math. Do you think holding physical gold is better than holding stocks? Well, I mean, physical gold, you have something. You have a metal. You have something that theoretically you could barter with. The old timers, when I was growing up, they all held physical metals. And they said, well, I've got something that's, it's never been worth nothing. So you could theoretically trade your gold for food, ammunition, whatever you needed if everything broke down. That's the way that they viewed gold. I don't view it the same way. I think that if you're in a position where you're trading bars of gold for something and things are that bad, you're probably not gonna last very long anyways. You'll just be the guy holding the gold for the next guy. So I've always sort of been partial towards I've always been partial to paper assets as opposed to gold. But physical gold, I would never tell anybody not to hold it. That's for sure. Just make sure you got safes and everything's secured because you don't want to get robbed and lose all your gold or anything. But as far as would I be holding stocks from right now? No. We'll see a big pullback coming. If this keeps going on, we're going into week 3 of this war. If we go in, let's say this war, they allotted 4 or 5 weeks. But let's say we get out week 6, week 8, week 12, then it's going to be a real challenge to keep the wheels on the economy. There's no question about that. So I would definitely be careful there. Okay, we're testing the top of that value area. If we break through the top of value, this thing's going to go for a run. Interesting. Fascinating stuff right there. Let me see. So good question, Funny. I think it's up to you. The only thing is, if you're holding stocks and you go through a big financial meltdown and the whole system ends, then you don't have anything. The stocks aren't insured. Companies can go bankrupt at any time. It's just the way that it is. When a company goes bankrupt, remember that as a shareholder, if you're not holding the preferred stock, or if you're not in the premium stock offerings and you're just buying common stock, you are the last one in line to get paid. So it's all really a risk. From that perspective, maybe holding gold is better. Could be. Let me see. 512 fib needs to be updated from swing low to swing high to swing low. I don't follow you, man. My fibs for gold, I think they were pretty good. Don't worry about it, Eli. Other countries don't have as much in their reserves. Yeah, everybody's going to be on empty, specifically looking at Japan. Japan's the big one. Let me see. Absolutely 512. We got hit first in Austin, Texas. Yeah, the shooter was wearing a Property of Allah shirt. I saw that. The biggest thing we're worried about right now, Eli, is you've got South by Southwest going on down there, and that's a big event with a lot of rich folks there and a lot of money. People are concerned about that in Austin. If you're there, let me see. Dragonfly Doji is bearish. I don't really know, to be honest with you. I'd have to look it up. Can we talk about the S&P? Absolutely, Noriko. Let's talk about the S&P. Let's get right over to it. No indicators. Let's just throw the S&P 500 up and see what we've got. US 500. What do we have here daily? Just a pure price action. Daily chart. Definitely looking at those lows, those Monday lows. That's a big level. So those lows really showed us what the S&P was capable of to the downside with regards to $120 oil, $119 oil. Oil was way up, stocks crashed, and then they bounced later in the day when you got reassurances from Trump that, well, this thing's almost over. Well, it's pretty much over. And then you heard everybody oil reserve talk, and everything was about propping the oil market, keeping a lid on it, and propping stocks up. That's exactly what you saw there. So if I'm trading the US 500, I'm looking there and I'm saying, okay, bottom of that range is very important because that's where the bidders really were. The rest of everybody sort of bailed, but that's where the bidders were. When the rubber hit the road, where did the bidders step in? They stepped in down there at about 65.79, right over 6,500. So that's absolutely key. I would definitely have that marked on my chart. That'll be this week's low. As far as where we're at on a monthly progression, interesting stuff. I mean, we were in an absolute log jam after that test of 7,000. So your 7,000 was right up there. The sellers stepped in. They won. And now what are we looking at? We've got a Fibonacci sequence that goes right there from that panic, that April panic, the tariff panic of April of 2025, this area right here, right from those lows, and then it just turned into a winning streak. And now we're starting to get into the deep water. Now government shutdown, Epstein files, and now we're talking about all these factors that are just external to what we should be talking about, which is economic growth, interest rates, things of that nature. And we really had a market that's stalled out. It's stalled out about the last 4 months. So now the downside of this thing, a lot of folks are starting to believe, and I'm becoming one of them. So can you short from here? We would have to get a better trade location. We'll look for one in a minute. But what are we doing right now in this month? Down big, spike low. This is where your Fibonacci's need to begin. It's down there, and you go right up there to that spike high, which is right around those all-time highs. This isn't exact. So where's your kill zone? There's a lot of room in here. There's a lot of room to sell off down to like 6,100 or 6,173, 6,200. That's absolutely huge. So if we're looking at something like the US 500, does this thing have room to the downside? Yeah, it has a lot of room to the downside. But like we just talked about for WTI crude, what has to happen for this market to really come off? Are we going to see this thing trickle down through the rest of this year maybe? Possible. You're going to need some big market drivers. Stagflation's one of them. You keep seeing the lagging economic growth, spiking unemployment, and persistently high inflation. Yeah, you're not going to have much growth in the equity sector. You're not going to be able to cut interest rates the way you need to cut them to really get that boom going that everybody wants to see, especially everybody in Washington, D.C. wants to see. So from my opinion, my viewpoint, you do have a long way down, but things have to keep going poorly the way that they're going right now. They're not going well. They just aren't. The economic numbers are bad. The employment figures have been bad. A lot of them are questionable. You got a partial government shutdown. You got a war in Iran. You got persistently high inflation. You've got a new Fed chair coming in that's going to have to cut interest rates somehow. And if they cut interest rates, what happens to pricing stability then, especially if crude oil's hanging out around $100 a barrel? How can you cut interest rates then? You can't. So what happens then? Then we start to see the negative price action take over in equities. That's the scenario. Now, the other side of that is you have an end of the war tomorrow. WTI crude goes back down to about $60 a barrel, $65 a barrel. Warsh comes in and cuts interest rates aggressively. That'll send everything higher. So from a fundamental standpoint, I see a very, very mixed bag right now. There is no clear way forward. I know where we're at, though. Down here, 6,200, somewhere down in that zone would be an absolute kill shot for a bid. As far as what could we expect to do in the short term, well, let's go ahead and take a look at our daily. Interesting. There's your lows, your panic lows. Key level, huh? 78%. I mean, look at what's happened. Boom. Came back 38%, got a little bit of a bounce there. Hit 62%, got a little bit of a bounce, and now we're bouncing off of 78%. This is going to be big. This is going to be a real important to the trading week next week. If you see crude oil gap up on the open, then you're going to see these stocks go down, and we really see the scenario for a major washout underneath 6,500. We really do. So we've got to be patient with the S&P 500. I am not, there's an old saying, fools rush in. I'm not really interested in taking a position just yet. This right here, the nice, beautiful bounce off of this 78%. Let's go to our futures contract. Let's go to our E-mini S&P 500 futures. Okay, you've got basically the same price action as that US 500 CFD. How many? 1.67 million contracts changed hands today. That's epic. That's epic volume. That's huge participation. Look at that, bounced right off of that. Let's go down to a 30-minute chart. I mean, this is beautiful stuff. And this is how Fibonacci's are supposed to work. 62%, boom, huge. Coming back, boom, break, 78%, big rally, big time selling that's come across the board here in about the last several hours. And now what do you have? You have an L formation. Give me my, where's my TPOs at? Time price opportunity. I call it time price offering market profile, but whatever. Point of control. Today's point of control right here. Where is it? 66.58, somewhere in that zone. Very, very tight. A while back, I talked about a B formation, as in boy, capital B. Boom. Sort of a void in here, and then boom. The idea is that this void gets filled in. If you do see a rally then that's probably where it's going to come from. You're going to rally right up here and maybe close right up in this B area. Really tough to say, though, as far as where do we go from here. Now, if you take off those long-term Fibonacci's and you just take a good look at your market profile here, your TPO chart, what do you have? You got your top side of value, downside of value, point of control. Point of control is outside of the lower bounds of the value zone. What does that mean? It means you got a pretty good intraday trend here in the U.S. session coming off. Definitely an L formation, so nice move there, right? What does that mean? It's extremely bearish. It feels like everybody's waiting for the other shoe to drop with crude oil. We failed right there. We're right at $98. It feels like that if we close up above 100, there's going to be some late day selling in this market, the S&P 500. However, the Fibonacci trades, the easy ones are already gone. We know that. What could we do right now? Well, you could either buy it or sell it, right? Or do nothing. I wouldn't do anything. The news too much. Okay, here we go. Now we're driving south. Now we're breaking south. 64.44. Okay, so we could definitely see a move right now. Let's pull up that. What are we, daily? No. Yeah, let's pull up that daily again. Okay, here we are. 30-minute. We're banging against it right now. Buy it, market. Just take a shot on a buy it, market buy. Horrible fill. We're late to the party, no question about it. 12.50 a tick. We're banging up against that 78% retracement. There's no question about it. Is this a risky trade? Pretty risky. Do we have compression here, consolidation? Yeah. Are we loading up to go lower? It all depends on what oil's doing right now. Oil coming down just a little bit. We're sort of hanging in there. We're down about a tick, 2 ticks. So what are we looking to get here, man? If we're tick scalpers, what do we want? Okay, right there's our break. Let's go ahead and put our target right there at 66.47. That's a pretty good little trade based on this Fibonacci level, which has been very good to us throughout the trading day. Let's take a look at the 1 minute. What do we have on a 1 minute setting up? Pretty good action. We should have been long from down here, but I was late to the party. We got long here. Do we have a chance maybe to get up and hit our profit target? More than likely we'll hit it. More than likely. Might take a little bit, but should we still be in this as a scalp, as a tick scalp? Once again, I mean, our entry point sucks. I talked about trade location all day long yesterday. Our trade location, we should have been live from down in here. No question about it. One thing this does have going is got a 1 minute. You sort of got that hammer formation. You had pretty nice follow through to the top side. The question is are the bidders going to step up and win the game down here? That really is the question. For me right now, it looks like, yeah, we want to gap up. We want to move higher, but we're fighting sort of an intraday U.S. session downtrend. It's not really a downtrend. We're only off about 0.5%, which is not a trend. It looks to me like we're going to get a little bit of favorable price action here. So do we take the money and run? I mean, probably should have. Now it's starting to get away from us a little bit. Now what do we do? It's going against us. It's going against us. All of a sudden, our entry point doesn't look so good. The market definitely is heavy. It wants to go down. Okay, there's the big move, right? There's the big move against us, and now we've taken out our key level. I would let this bleed for about another second, and then you got to get out. You got to get out. Look at it. It's a significant trade. You're down 175. Do you let it tick? Do you let it go? Does it run? Do you let this run? You got to get out. You've got to get out of that. We should have already been gone. Do you flatten 12 seconds, 10 seconds, 9 seconds? Look how fast this can get away from you if you're not tough. We were only looking for a little bit of money to the top side. Now look how negative this has gone. Take a look at what happened here. I mean, it's really a good teaching moment when you take a look at, okay, we had a nice entry point right here. We missed our entry. We tried to buy in up here and get a move even higher. Should we have got it? Maybe, maybe not. Now look at what's happening. We didn't cut the trade off. It should have been cut right beneath that, right at break even in this instance. Now the thing's running against you. How do you get out now? Now the market's really turning, really starting to eat you up. You can see in the markets how a little problem gets to be a big problem. One of our fears as traders is that we look at the board right now and say, God, I don't want to cut it off because if it bounces up and it rallies, I'm going to miss out. I'm going to take that loss. And then I'm not going to get the profit either. So we're still in this trade. Should we be? No. Well, look, we're making a comeback, right? Maybe, maybe, maybe not. Believe me, once these trades start to develop in this area, in this arena, this is the part of the game you really don't want to deal with. What do you do now? I mean, we were just down 500 or 600, and now we're only down 200. Probably should just take it off. Cut your loss, right? Or do we want to stick with it? Stick with it and keep our fingers crossed. I mean, in my view, the trade's over. The trade was over right here. Boom, boom. Good. You get a good entry right there, shade by a tick or two. Bam, there's your move. And then the sweep comes, and you're in trouble. That right there is what happens to a lot of traders. It's happened to me before. You get enough rope, and you hang yourself. Some trades need to be cut off. Some trades don't need to be cut off. But think about the market structure. 30-minute chart, downward trend in the U.S. session. It's really tough. Ralph H., cut losers with an exclamation point. You cut them off as fast as you can. So in this case, as soon as that lower level's gone, we're out. We're not even messing around because this could definitely go a lot lower. Crude oil right now is getting established up above 98. All right? Okay, so if it's up above 98 and we get a close, say, up around 100, equities are going to suffer. That's just sort of the nature of the beast. Let me see. Eli, I was wondering if the Fibonacci should be anchored from the swing high to the swing low. It depends. Depends on what you're measuring. So if you're measuring an uptrend, you go swing low to the swing high. And in a downtrend, you go swing high to the swing low. You're always going with price action. So essentially, yeah. Been trying to put more effort in using the fibs. I'll show you one good Fibonacci sequence before we sign off here. That is what happened to me the last 2 days. I got swept off. Well, here's what's hard about it. And this is trading. You know, I had an interview, not an interview, but I had a meeting with a trader not too long ago. And I said, the thing about being a trader is you have to be able to let go and hold on tight at the same time. You have to be able to let go of it. I mean, if you cut, we should have been out. We should have been out right up in here. With that garbage entry, the entry should have been here. But okay, fine. We just took the trade to take it. So we're up here, right? I should have been gone. As soon as we didn't get paid off to the top side, we're out. We're not even dealing with this. Now, what happens? Let's say we flinched and we waited and we didn't cut it off. And we were down $400 or $500 and I cut it off down here only to watch the next 4 minutes really rally in my favor. And now things aren't really looking as bad as they did 3 minutes ago. They're still bad. I mean, they're still bad. But now a lot of traders are sitting there going, okay, we're back. But take a look at what your entry point means. It means nothing. I mean, if you're going to stay in this trade, then you cannot have that as your profit target. You got to say, okay, there it is. We're going to shoot for market structure. Let's put it right up in here. And then your stop loss goes beneath that swing low. And then you got your trade. That's how you would have to do it. And odds are most of these are going to be losers because the market has to reverse from this area right now. Maybe it will, maybe it won't. The level's good, but, you know, it's been had. Look how many times it's been had, specifically right then. Okay, let me draw a Fibonacci retracement for you, just sort of show you what I mean. If you're in an uptrend, here's how you draw it. Right there, you're going to begin. That's going to be your 100 level. Your 100 level is going to be your swing low, okay, and your swing high is going to be your 0 level. All right? Now, let's say we want to do this from a different direction, the down direction. The swing high is going to be your 100 level, and the bottom is going to be your 0 level. That's all there is to it. Where the art form is finding which ranges really work for you and which don't. And there's a lot of different ways to do that. This right here, it's garbage trading. I mean, a lot of people do this type of trading, and it will not work for you long term. That's for sure. Do all traders not have stop losses? Steve Francis, no, they don't. No, one of the great things about being able to work with how to trade is I've got to meet a lot of you, and a lot of you have told me about the signal providers. And a lot of the signal providers, something I found out is they were telling traders to scale into their trades. So like if we bought here and the market went here, buy more here, and then buy more here, and then our entry point moves down with us with the idea that it does come back. In that instance, you don't have a stop loss. You can't have a stop loss. You just have money. You either have enough money to keep keep the position going or you don't. Now, that's how a lot of investors do business. As traders, I can't recommend that. Now, there's a lot of different ways to stop yourself out, though, Steve. And like what we were doing right there was time-based, where you just sort of give it a second to react. And I do that quite often. And sometimes you get burned. Most of the time, the market shakes out and goes in your favor. But when it doesn't, it goes against you. I always like finite stop losses, though, either based on market structure or a static pip structure, or a static tick value. I find that to be very instructive. But a lot of traders don't use stop losses. They don't. They just figure they can read the market, and the market's going to go their way. All right, let me see. T. Marina, the market's a pendulum. It swings between unsustainable optimism, makes stocks too expensive, and unjustified pessimism. It makes them too cheap. The intelligent investor sells to optimists and buys from pessimists. Yeah, that about covers it. I mean, really, all we're talking about is euphoria and fear. Everybody's so excited the market's going to go to I tell you what, where are the Bitcoin guys around at 125,000 that were saying you were going to 5 million, 3 million? Kathy Wood was calling for 2 million. Where are they at? They still believe it, I'm sure. That money's not holding up too well, though. Let me see. You're welcome, Narek. I hope that helps you. I'm confident it helps you. How's that? We got to get hope out of our lexicon. Let me see. T. Marina Shane, when did you fully grasp the concept of that quote by Benjamin Graham? Well, I mean, if you saw the trade location yesterday, it really took me years to understand what good trade location was. And if you're talking about that pendulum concept, which is great, it's a great quote. Price, your charts can essentially show you that. I just really get upset when people pull a 1 minute chart and say, okay, what is this? This is unsustainable optimism. I call it euphoria. This is euphoria, and this is fear of panic. You can't do that on a 1 minute chart because the ranges don't really work. Longer time frames. That's why I base everything on longer time frames, because that's when you can really find that concept really works. You can see what euphoria is. Was it euphoric buying crude oil at 119 last Sunday? Yeah, I think it was. Well, let's go to 150 and 200. It was a great question from Ralph. He says, what happens if we go to 200? I've heard $200 crude oil really every day. People in the media have been saying that. So I'm sort of really going, okay, well, what does all that mean? 119 was euphoric? Yeah, it was. Who was selling the S&P 500 at the bottom on Monday? People that were in a panic. They're panicking. So it took me years to figure that out, because I always thought that I was sort of taught that a chart's a chart. That's not true. A 1 minute chart is not a daily. A daily is not a weekly is not a yearly. So understand that. Long to short are important, just in the sense you can identify key levels and understand, hey, when is something really overbought or oversold? Was the Dow overbought at 50,000? You got to remember, and it's a good point, T, and it speaks right to your quote there. When the Dow was at 50,000, Trump was out there saying it's going to double. Remember that? That was only 3 weeks ago. So was it euphoria at 50,000? Yeah, it was. In my view, you're at 46,000 now. Well, we had a war, and I said still though. But it's a great point. But it took me years to figure that out, what overbought and oversold is. It took me years, truly overbought and oversold. Years. Absolutely, Eli. You're welcome. So I hope that helps, T. Scaling into a trade is so risky most of the time. Yeah, losers beget losers beget losers. So sooner or later, you're going to run into a loser that'll wipe you out, dollar cost averaging. I hung a poster on my wall with this quote. It's a good quote. It's a good quote. Don't buy the highs, don't sell the lows. The truth is we can still do good business in the middle. We can do good business in the middle. And that's what a lot of traders do. They trade the middle. I try to trade the middle whenever I can. That's where the market profile stuff comes in. All right, let's have one last look at our pet rock here. Is this a good trade? It's horrible. The way that we executed that. And it still might go up and win, but this is a textbook example of a short-term quick hitter becoming a day trade. That rarely works. I mean, it rarely works. The market has to reverse in our favor. It may not. But one thing's for certain, this line in the sand's important. Got washed out, came back. Now it's resistance. Now we're breaking above it. Potentially could rotate up and get a profit. For me, I think it was a really poor trade. Not good trade execution just because we missed our initial entry. We could have nailed that, missed it. Now, you're just hoping if you're still in it, you're just hoping the market goes up. Come on. There's no reason to believe it's going to go up. Psychologically, there's no reason for it. You're looking at crude oil. Crude oil is at about $98. Why would stocks rally right now? Because 98 is going to be where it settles. If you're going to get a rally in this, you'll probably get it late in the day after crude oil's volumes die way down. Nah, that's garbage trading. Absolute garbage. All right, guys, I'm going to go out. Eli, I would have done it earlier. I got to get going, though. It's been about an hour, gone on too long, but there you go. All right, everybody. Have a fantastic week. I know it's been sort of a long one. Take a weekend, take a break. We'll be back Monday. I'll get the stream schedule up and running here in the How to Trade trading room momentarily. It's going to start changing day to day, though. We're going to be covering what the big events are as opposed to picking them. Just remember that we have FOMC Live next week. That'll be our big event on Wednesday. And then we'll probably do another webinar, probably a How to Trade Crude Oil webinar. I've got a lot of interest on crude oil with some of the materials that we put out across all the platforms over the past several weeks. So that seems to be the big game in town. Look, I'm still watching this S&P 500 trade, even though I know it's garbage. Oh, well, right? Okay, one last question, T, and then I'm going to go ahead and sign off. Shane, what's your thoughts on trading buy-side and sell-side liquidity? Have you ever traded it? God, it's just in what sense? In what sense are we talking liquidity? A lot of folks believe, can we anticipate liquidity? Do we use the liquidity sweeps? I really, that's a long conversation. Ask me again, T, on Monday when I'm a little fresher. Tina, thank you. Thanks a lot. Have a great weekend, Tina. You too. Peace and love. Absolutely marvel. Everybody take care of themselves. Stay safe out there. If you need anything at all, reach out to me on How to Trade. Just go ahead, get your free account. Send me a private message. I will get back to you. I'll get back to everybody. And then also over at Switch, if you need a place to trade. Switch Markets is a global destination. Thousands of markets, tight spreads, everything you need. The peanut butter and the jelly. Okay, have a fantastic trading session. Look at our trades going back into the positive. Wow, unbelievable. Have a great day. Finish today. Be smart about what you're doing. It's all about crude oil, especially if you're trading equities. If you see crude spike and get a runner up to about 100, right now we're printing 98. It's going to be exciting in today's trading day. And look at our trade just went positive. You got to love the markets. If you got enough money, right, any dreams are possible. Have a fantastic trading session. We'll see you back here Monday. As always, trade the action well, and we'll talk soon. See ya.